Guys, hello guys, how's it going? So yes, I basically want to teach something little, okay, and I hope it can help you guys. So I'm actually on pounds Japanese yen, okay. So anytime you're willing to trade, always get on trading view first, because you want to analyze the market first before you go ahead and take a buy or sell on your MetaTrader 4 or any platform you're trading on. Okay, so when you come on your watch list, you can see all the assets you want to trade. If it's cryptocurrency, have Bitcoin, Ethereum, Shiba, ADA. If it's indices, we have US 30, NAS 100, we have German 40. If it's gold, XA USD. If it's pounds, any currency you're interested in, put in your watch list. Is that okay? Now you open your chart and you have this. And currently I'm on pounds USD, the 1 hour time frame. Okay, so that's the time frame I'm doing my analysis on. So when you are presented with this, you are presented with what? A raw chart. And anytime you open trading view, this is what you have. You have the chart, and then you have a volume indicator below. And what the volume indicator does is it tells you, or it gives you information behind the scene. It's like all you're doing as a trader is like you're looking for an edge to take a buy or a sell. But now with the volume, you get to know that, okay, these are the number of investors interested in taking a buy, and these are the number of investors interested in taking a sell. And so you see the volume indicator below. When you put it on the green bar, it's going to tell you. You can see that currently we have 4.407k. When you look at your top left, you see the volume 4.47k. Investors are what? Interested in taking a buy. Then we put it on the sell. And then what do you see? You see 5.137k interested in a sell. So just from the volume, now you have information that what? There are majority of sellers compared to buyers. Are you getting it? You can see that when you look at the candlestick, you can see that actually the selling or the bearish candlestick is smaller compared to the bullish candlestick. But even though it's smaller, they are more interested in the sell side. And even though the buying is bigger, it's like a few investors. I hope you are getting it. So now you're able to what? Process this. Now you are taking this information in to know, okay, it's like I'm seeing a big and a small candle, but behind the scenes, this is the volume of orders that is being taken. I hope that is clear. So that's just something I wanted to point out with the volume. Okay, and now when you come, what do you see? You realize that I always start with what? My support, my resistance, and my mid-level. Why do I do that? I want to know the points of interest, like what are the levels the market gets to and then it tends to reverse. What are the levels the market gets to and it gains support? Are you getting it? These are points of interest where you might want to get involved as a trader. Is that okay? So with my chart, what I do is what? I take my horizontal line and then on my screen, I ask myself, which is the highest point the market has been? And you can see it's right here. Good. And over there, what I can see is what? I'm getting a double top vibe. Meaning, around this point, where I have the crosshair, that's 15th April 2022 at 6. You can see that what the market came to this high. And then from there it dropped, it started coming down, started falling. And then on 17th April, we see that the market started rising again. And it comes back to that same top that we had some days back. And then when it got to that same top, what happened? The market started dropping. I getting it experienced a sell-off. So that point serves as what? As a resistance. It is resisting price from going further up. It is trying to stop price from going further up. So I see that what? As a point of interest. A point I'm interested in getting in the market for what? A sell. Is that okay? So that is the basis of what? Having your support and your resistance in place. And then I ask myself, okay, where do I see the lowest point the market has been, and that's going to be my support. So on the screen I scan and realize, okay, at this point is my low point, so I drop it there. And so now from a raw chart, I see that at 160.515 it is a point of interest. It is a support for me. That level is holding as a support, meaning that when the market came there, it prevented the market from going further down. So the simple analogy I like to use is this: when you are standing in your room, whatever space you are, you look up, you have a ceiling. If you intend to jump, you can only jump as high as the ceiling is. The ceiling will act as a resistance, preventing you from jumping or going out into space. And the same way, when you are dropping, you drop to the floor. The floor prevents you from falling down into Hades or going further down to the ground. So this acts as a ceiling point for you. So the same thing on your chart, there are levels which acts as a support and a demand, and that is what we look for. When price gets there, price tends to stall. It means that our price gets to wait. It doesn't go. It's actually, I'm being resisted, I can't go further, and it holds price. It gives price a level to stand. Okay, so that is it. And now the next point, after marking my support, my resistance, now I'm interested in the middle level, or the 50% level. Okay, so I'll take another horizontal line, and then on my chart I scan and say, okay, this is a suitable mid-level. Then I drop it. So now I have 3 points of interest. If I take a sell on this chart, if I take a sell at the resistance area, okay, I am looking at riding the market down to the mid-level, and then vice versa. If I happen to take a buy from the support zone, I'm looking at riding the market back to the mid-level, giving us a good amount of pips. Is that okay? Now that is it. Okay, so now you're trying to add flesh to the chart you're looking at. This chart I'm looking at, all I'm trying to do is trying to get an edge or see the point I can enter the market to make money. Okay, so I'm just helping you with that analysis. Okay, so now I've done this. Now the next thing I'm asking myself is, what's going on in the market? Like, what's the structure of the market telling me? Is the structure of the market to the upside or to the downside? Like currently, what is the market doing? What is the market saying to me? Okay, so now I look at this market and I'm saying, okay, I'm seeing the pattern I'm seeing right now is that the market is giving me a double top, and anytime a double top happens, then we have the possibility of having a sell or experiencing a sell. So first top, then second top, then the market drop. Now the market seems to be rising up again. Is that okay? So sometimes you can get a double top for an aggressive drop or a triple top for an aggressive drop. So we've had two. So if the market is able to come again to that zone, then it will be feasible when we get a confirmation of a bearish engulfing candle. So when the market is able to rise and come into this zone or this area, okay, and then followed by a red candle, a red engulfing candle or a bearish engulfing candle, then that tells us that yes, truly sellers are interested in getting involved in the market at this point, and so we want to enter for a sell. Are we good? We want to enter for a sell, and they will be riding the sell down to the middle level, Is that okay? So now, then I'm going to, so after I've seen this double top, then I'm going to ask the structure. What's the current structure? So I'll take this high. I'm going to mark out the high and the low I'm seeing in the market, like currently. So I'll take my horizontal ray, and then I put it here. So okay, at this top, this is my current high. Okay, so I drop it there, and then I'll name it. So that's my current structural high. Is that okay? Then from there, what is my current structural low? So I can see over here, during this period, trading period, the market got to this high. Now it dropped to this low. So this point is the lowest. I get lowest. That's the current structural low on the 1 hour time frame. Then from this low, the market started moving up. So I'm going to mark that point as my, so I'll name it. So that is my current structural low. Is that okay? And then I'll ask, before this current structural low was formed or was created, was there a break of structure? Was there a break of structure? Is it that there was a previous low that was formed that has been broken that led to this new low? Is that okay? And so when you come here, you can see that, okay, over here I see that there has been a break of structure because the market got to this high and it came down here, creating a low, and it rose again, and then it came down again, creating another low. So over here I see this point as a break of structure. This candle created a low. Okay, it created a low which has been broken by the current structural low. So we'll take another horizontal ray and then we'll mark it. So when the market got to this high and then dropped to this low, right? It got to this high and dropped to this low. It put in a low. It put in this low. Okay. Then later from this low, you see that the market went up. And as the session went, the market came down. And this down move broke the previous low. So I'll name this place what? A break of structure. The structure has been broken to the downside. Okay, so I'll name it what? BOS simply means break of structure. And I've added a barrier. So it's more like a police barrier. If market is able to break that barrier, then it means, okay, market is intending to go down. Is that okay? This is just how I analyze the market. This is how I add meaning to the market before I take my trades. Okay, so now I named that point what? As a break of structure. Break of structure. So the market created what? A new low. So now this is what I do after any time I see a break of structure. Okay, happening here, a break of structure. So this red candle broke that previous low. So anytime I see a break of structure, now I don't just jump in the market for a sell. I wait for a pullback. I want to enter the market at an optimum level. So what does the pullback do? The pullback, it pulls the price back into the previous high area. Is that okay? So it can pull back and get here and then reverse, but it brings it into this zone. So now the next hardest thing is knowing when to get involved in the market, knowing when to enter. So there are different ways you can enter. One is what? You can use an order block. So after there's been a break of structure, now you ask yourself, okay, on this market I saw that there was a break of structure. Now you ask yourself, which candle is the last bullish candle before sellers took over the market? So you can see that this small green candle is that last green candle, or is that last bullish candle before sellers took over the market. So that will become what? Our order block. That will become the area we are interested in what? In entering the market for a sell. So we are going to use a rectangle to capture that area. So which area is that? Wait, let me increase the size of the candles. Okay, I think this is better. Okay, so this is better. Is that okay? I think it was too small. So you see what I'm saying? We have what? So we point on this candle, this green candle, as the last bullish candle before sellers took over the market and brought the market down. Okay, so now let me adjust it well to fit, and then this, adjust it well to fit, and then this, adjust it well to fit. Are we good? So now you ask yourself the last bearish candle, so this one, so we'll capture it. We'll use a rectangle, and I'll capture this candle. So length to length, and so now this gray area is going to be what? Our order block, or the place we'll be looking for what? Sell opportunities. So you see that okay, this place is going to be a sell. So anytime the market enters this zone, enters this gray zone, we are interested in taking a sell. Are we good? We are interested in taking a sell, and then we'll put our stop loss a little above the zone, a little above the structural high. Okay, so that's one way. That's one way of what? So this zone becomes what? Our sell order block zone. So anytime price enters this zone, we are looking at taking a sell, and then our stop loss will be a little above the structural high. Okay, so that's one way of entering the market. Now the second way of entering is this. You are going to use the Fibonacci retracement tool to see if the market, when the pullback was happening, the market has been able to pull back to about 50% or 61.8%. Then if it has done that, then you are interested in entering around that area. Is that okay? So now when you take the Fibonacci, you are interested in what? The swing high and the swing low. So that will be our current structural high and our current structural low. So we'll take what? The Fibonacci 2. That's the Fibonacci retracement. So we drop it here at the top, the current structural high, and then we pull it down to the current structural low. Is that okay? And then on the Fibonacci, you can see some numbers on it. We have the 0.5, 0.61. So that is the area we are interested in. The 0.5 and the 0.61, that is the area. So we are asking ourselves, has price pulled back into that area? So we can see that yes, price has actually pulled back into that area. It pulled back into the the 0.5 area. So then that is an area we can look to enter for a sell. Is that okay? So you have two options. If market doesn't rise to your order block, yet it rises to your Fibonacci golden zone, the 0.5, 0.6 area, then you can take a sell. Is that okay? And so we can see that the current market dropped to this low, and it pulled back. This is the pullback process, and the pullback process comes into our 0.5 area. So this area 0.5, 0.6, that is an area of interest. Anytime there's a pullback, that's an area we are looking to enter the market for a sell. Is that okay? And from our analysis, we are sell biased because we had a break of structure to the downside, and then waited for a pullback. And now anytime the pullback happens, you as a trader, you are now interested in knowing when to enter. That is the most important part. Some people become analysts, they'll analyze the market, but they don't know when to enter. So this is how to enter. This is when to enter. When price enters your golden zone, or when price enters your order block zone. And then make sure that your stop loss is placed. Your stop loss is placed above your swing high. Is that okay? You give your stop loss some breathing room. Okay, so now that is it. So now okay, that's how I can use the Fibonacci. So now you look at the 0.5 and the 0.618 level on the Fibonacci as your entry area or your entry zone. So let's use a rectangle to capture that zone, and then remove the Fibonacci off our chart. So on the Fibonacci, we see that the 0.5 level is here. to the 0.6, this level, this area, and now let's name it. So name it as what? The Fibonacci Okay, let's do the Fibonacci zone. So the Fibonacci zone for what? For our entry. That is it. Okay, so now we can take the Fibonacci itself off of our chart. Is that okay? So now what? You have two interests, two places you can enter the market here. You can take yourself in this Fibonacci entry zone, or you can take yourself in this other block entry zone. Is that okay? So these are the main points what sellers are interested in getting involved in the market. So anytime it comes here, you are right for taking that sell, and then you make sure that what you give your trade a little breathing room. So the swing high, you give some room and say, okay, my stop loss will be around this place. Is that okay? And so let's say you enter a sell here, you are aiming for what? This move to this downside, to this what? Middle zone we started with. Is that okay? So basically what? This is something I wanted to basically point out. Okay, so now looking at what? Our current structural high, our low, our breakout structure. Now we see, okay, there's a point we can enter the market. And we've added a few confluence. One, the market what gave us a double top. A double top. It came to this top and then it dropped, and it rose again and came to the same top the second time and dropped. And so when we are also likely to have a third top, that gives us what? A triple top. So it comes to this high, and when it comes, you are looking for what? A bearish engulfing candle. So the market might just be green candles rising and coming into the zone again. Then you see a bearish engulfing candle, a red candle, then that should tell you that okay, sellers are ready to get involved in the market. Then you can take your sell. So what? It all depends on you as a trader, how you look at the market to enter. For your entry, there are some traders that are very conservative. I want to wait for the optimum entry or the sniper entry before I take the trade. There's another trader who is like, okay, price is in my zone, I want to take the trade now. As long as I have my stop loss in place, I'm good. Then you take the trade. Is that okay? Now this is it. Okay, now I want to add this thing, the moving average. So mostly one of the most used moving averages are the 50 and the 200. Okay, and so what investors or traders do is when they see that okay, price is beginning to close below the 50 or the 200, then that is telling us that the trend is changing to the downside. And when price is closing above the 50 or the 200, then price is to the upside. Is that okay? So we use what? The moving average to also determine the trend of the market. And so you can have the market, you can have the prices staying above the 200 and the 50 moving average for some time, but market doesn't stay over there for forever. So they'll get to a point where now market will come below it, wouldn't stay above it. So the point when it comes below it, then you are trying to see, okay, is the market changing trend? Is that okay? So now when we let's throw the 50 and the 200 moving average on our chart. Okay, so now we have what? The 50 and the 200. So the red moving average is the 200 and the green moving average is what? Is the 50. And you can see that what? Price stayed above the 50 for some time, and now we have a what? We have price closing. You see this bearish red candle, it closed below what? the 200, it closed below the 50 moving average. So that's close also, and it closed what? Fully bearish. So that close is what also showing us that, hey, the market might be what? Switching or changing trend, or the structure might be changing. Is that okay? So that's also one way of determining, okay, if the structure is really changing or not. And then anytime price comes what? Start closing below it, then there's the expectation that what? Price will be able to move from the 50 to the 200. Price will move from what? The 50 to the 200. So when you are trading now, this 200 moving average, it is called what? A dynamic support and resistance. So now you can see that what? Currently the 200 moving average, which is the red one, is below, like price is higher above it. And so since it's below price, then it is acting as a dynamic support for price. So when price begins to drop, it can drop and come and tap on it. Is that okay? So when you are taking a sell, then you are aiming for the position of the 200 moving average to say that, okay, when price gets here, I can take my profit, or I can secure my profit. Are we good? I hope you are gaining some clarity. Okay, let me clear these charts. I don't like my chart looking too plentiful. Okay. So now it drops. So when we are having that drop, what? We are aiming to take profit at this level. Okay. And then again, you can also take profit at this level, this previous low. See, the market went up and dropped to this low, and at this low it started going up. So this current place can also be what? Your first take profit before it gets to what? The 200 moving average. Because this is what people say, oh, I've been trading, I've been planning demo, I've been doing this, but I don't know when to enter the market. I don't know when to take my profit. Is that okay? That's why I'm trying to do this short video to at least help clarify all those things. So here you'll be aiming, you always look at your left and see where the market hung around. So over here it came to this low. When you come here, realize that market was hanging around this area. So this point can be what? A feasible point to take your profit. And that is what? 100 pips. That's 100 pips right from where market is currently at. Market is currently at 165.000. So if it drops to 164.000, that is 100 pips move on pounds JPY, and that is a feasible take profit. Is that okay? Then after you secured, and it's like, okay, I've secured my profit, I still want to trade it down. Then the next point is what? The 200 moving average. When it gets there, that is what? A feasible take profit point. That move alone, what? From where market is currently to this place is what? 150 pips. And when you look to your left, you realize that what? Market also hung around this area for some time. When you look to your left, you see that, oh, market came to this low and then it bounced off. So it is a good what? Area to secure your profit. Is that okay? And let's say you are going for, your main goal is to what? To smash what? 200 pips. Then you are aiming for the what? From 165, you are riding it down to 163, which corresponds to what? Our middle level, when we're marking our support, our resistance, and our mid level. Is that okay? So this is just something I wanted to point out to you guys. Okay, I hope you gained some value from it. And yes, I was asking for your suggestions on how to go with my YouTube channel, and yeah, I'm getting some feedback, so thanks on that, and keep the suggestion coming. Okay. And yes, so pretty much that is it. Okay, so now let me clear my chat and let me see if I can talk about something else. Move. And so yes, so for me currently, my bias is more of a sell on pounds JPY. You see, previously my bias was a buy till it gets to the 165 zone, and it got to that zone. Why? Because it had actually given us a first move to that side and an aggressive drop. So expecting a double top, you expect the market to rise back to that same zone, okay, which it did. So now my bias is what? A sell in the coming week. And today the market is kind of slow because it's Easter Monday and a lot of banks are having holidays. So I expect that from tomorrow the market will have some aggressive moves. Okay. And anytime you are trading, trade with stop loss. Okay, trade with stop loss. Something I keep stressing on. Anytime you take a trade, don't just take it and say, okay, I'm done. Whatever the market does, trade with a stop loss. Discipline yourself. Trade with a stop loss. Trade with what? Proper risk management, and then you'll be good. So anytime you lose, you're okay with it. It's like, oh, I was willing to risk this amount of money to gain this amount of money. Are we good? So I think that is it. And let me run my, yeah, pretty much I'll end it here. So yes, good. Have a good one. And you can share as well. Okay.